Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. Generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. I do this through midweek updates and Q&A sessions on the weekend where you can interact with me directly. Um, I have nothing to hide from, so you can ask me whatever you'd like. Those are all recorded and they are uploaded to the website. So you can see previous ones. You can see my purchase history. You can see my portfolio. You can see I set up a portfolio in front of everyone of my Roth 401k, and you can literally see how I built it. I describe why I purchased things, the reasoning behind it, the setups, the technicals, and all that stuff. It doesn't mean I'm perfect, but I'd like to think that I've got a pretty good um, percent win ratio, is what I'll call it, and decent entry points. So if that interests you, definitely sign up. Special is a coupon code. You get $25 off a monthly membership for the first month only, and you get $100 off with a yearly membership if you'd like to swap from a monthly to a yearly or sign up directly to a yearly. Unusual whales, Zelle, which is Zelle payments, will allow users to make international payments using stablecoins. Oh, crap. Here it comes. I don't like seeing this, guys. I feel like this is a gateway to massive control. I'm not a big fan of these cryptos. I don't want them. I like the how can I say this? Anonymity. Yeah, anonymity. I like being anonymous. I don't like being tracked. I don't like things in my face. But I don't know. This looks like a gateway to that new world, unfortunately. Coming down, and I've heard this before too. I just wanted to make a comment. It says tokenized gold is a scam and Peter Schiff is a dirtbag. Bitcoin fixes this. Anyway, Bitcoin cannot be backed by the energy used to mine it. That energy is spent. I've seen the world's greatest minds confused by this point. I don't know if this is really being confused. Bitcoin is an absolute SHIT show when it comes to energy usage. It is not backed by energy. It's spent. It's never reclaimed. And once it's gone, it's gone. And some people will say that energy never leaves us. It's just simply transferred. But I would like to think that we'd want to keep our stored energy, our batteries, so to speak. So fossil fuels are batteries. It's nature's batteries of stored energy. Ultimately, what fossil fuels are, and I know this seems kind of weird, but fossil fuels are stored sunlight. Yeah, I know, doesn't make sense, right? Well, if all energy comes from the sun, and if you've got all these carbon-based molecules that absorb sunlight and all this other stuff, I mean, ultimately, fossil fuels, coal, natural gas, oil, uranium, even are just stored sunlight, and then when we burn it, it releases that energy. So, yeah, I guess everything does come from the sun, and we don't want to deplete any of those batteries that the world has thankfully given us into something that doesn't give us any return. That's what I'll say there. When housing crisis, I want to buy the dip. So he's saying, when is this housing crisis? So this is lumber versus gold. And we have a downward move of lumber underperforming gold. In this ratio, I think Michael Gayed uses this, is saying that we could get a crisis. That's what Sam is saying. He's interpreting this ratio going down as a potential crisis. What I would do, this is how I would approach it. I think that the housing market is underbuilt. I think mortgage rates or interest rates have gone up substantially in a very short period of time. We saw home sales drop off. And what I would do, if they're going to lower interest rates, watch what home sales do. So what I did is I went and looked at NAR for September. So this is NAR existing home sales report, shows a 1.5% increase in September for home sales. So month over month, it's a 1.5% increase month over month in home sales, seasonally adjusted annual rate of 4.06 million in September. 1.3% increase in unsold inventory, 1.55 million units versus is equal to 4.6 months of supply. So 4.6 months of supply is reaching more of a balanced market. It's not anywhere near crisis level. Crisis level is like double that. 8 months, 9 months, that's up there. 6 months is considered to be a balanced market. So we're still on the tight side, and we've been loosening a little bit. So interest rates and perhaps the mortgage rates have slowed down home sales and slowed down and gummed up the market. And that, I think the market is loosening a little bit. Year over year, 4.1% increase in existing home sales and 2.1% increase in median existing home sales price to 415,000. So prices are going up. We're getting increases of existing home sales in both month over month and year over year, which is good. That's not crisis level. So when crisis, I'm not sure if we're going to have one. Could this be something that's a little bit different? Could we have gone through a slowdown where gold outperforms lumber, home sales kind of squeeze up, but we maintain a buyer base underneath the market? So when interest rates fall or mortgage rates fall, we start to see an increase in home sales and new builds. We will see. I think that's going to be the case. So I'm not in the camp of win housing crisis. I think that if they can get rates down, that we will see the housing market go back up in terms of home sales, the volumes of home sales. But that's yet to see. We'll see it. We'll see it if those rates drop, and we'll see if prices come on back. And I don't think we'll see a crisis. I don't think we'll see one. At least not yet. We'll see. Mike says just 3% of companies have generated all of the net wealth in the U.S. stock market since 1926. 3.44% have generated 100% of all the net wealth. What do you think about that? So you got to be very picky on what you're choosing. What I've found, if you're going to choose a regular company, this is my approach. If you see it and you use it and you like it, go buy it and then sit in it for a long time. That's about the best investing knowledge that I can transfer to you when it comes to regular companies. So when I was growing up, it is very obvious who the winners were. When I was even a little kid, easily McDonald's was crushing it. So McDonald's was crushing it when I was a little kid. Coca-Cola products were pretty big. Coca-Cola and Sprite. TCF Bank, Visa, MasterCard, people were using credit cards and they were gaining popularity. Those just seem like easy layups. Nike with Michael Jordan. My Lord, what an easy layup. So those are the ones that I would invest in, are the ones that are just obvious, blatantly obvious. Walmart was another obvious one, in my opinion. Here's a couple more obvious ones that aren't publicly traded. Chick-fil-A, obvious. In-N-Out Burger, obvious. Those are just obvious to me. They're always busy. They're always slammed. And then they absolutely tear it up from an operational perspective. Absolutely tearing it up. So those are like easy layups that I see when I go out and look at things. Coming down, I I must have showed this one. I lived through the internet bubble and the housing bubble, and the entire time, many people were calling it a bubble. The idea it can't be a bubble because people are saying it is nonsense. Timing the end is difficult, but that's another matter. It's not about, guys, this is what makes these things obvious. Just trust me on this, okay? I know it's very hard if you see other people making money and you're not making money. But this is how you can tell if you're in a bubble. You can tell if you're in a bubble by the valuation of whatever's being sold. The internet bubble was a massive bubble. Most of those companies and some of those companies had zero earnings. They had nothing. They were banking ideas like Enron was. They were discounting future cash flows of ideas. I mean, this is complete garbage. You're paying out the nose on a price to earnings, price to book, price to sales. All of the ratios were screaming red warning. So how do you keep out of a bubble? Look at the valuations. Always buy under valuation. Never chase overvaluation. Never get into the emotional FOMO state. Get out of it. Be disciplined. Follow a strategy and approach. Do not get sucked into full stupid. Do not go full stupid. So you can see bubbles. They're pretty blatantly obvious if you're looking at the right things and you're looking at it from a logical perspective. If you get incredibly emotional where you see things on a chart go up, like a big breakout, and then it wants, like your being wants to buy it, you want to chase it. It's in most people's genetics to chase. You hear a loud noise, you want to go investigate it. You see a shiny object, you want to go rub it or something. Or you want to go, look at it like it's a diamond ring. You know how girls get attracted to diamond rings. I'm not saying guys don't either. I'm just saying in general. So you got to almost break that emotional reaction. And then you just chase patterns all day long. Chase valuation and patterns. And the way that you protect yourself is what I just described. You buy it when it's low, you buy a pattern, you may have to be patient, and make sure that you got the valuations at your back. And as the cycle turns, you should see the cycle in the charts. You get in cheap, you get in low, and then you ride it. That's how you do it. Don't buy overvaluation. Peter Lynch says nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you have invested. Keep in mind, a lot of these companies, they are subjected to the price of the commodity. So you are subjected to the boom bust cycles of the commodity. And the companies are just leveraged ways to play that if you're in the commodity companies. So what you need to do is you get excited when things are cheap and the commodity is down. It's in a recession down cycle. For example, lithium is at a bottom of a cycle right now. That's when you want to get excited. You want to get excited when there are certain characteristics in the chart that you want to look for. And then that is what allows me to pull the trigger. It's like, hey, I've seen this before. Pull the trigger. Hey, this looks like a bullish flag pattern. Pull the trigger. Hey, look, the valuations are off. Hey, you know what? I'm not going to pull the trigger on this. Well, why not? The chart looks good because it's overvalued. I have nothing protecting me. Okay, I get it. I get it. So you don't want to buy them. Correct. Valuation and overvaluation can really hurt you because if you buy something that has confluence is the merging of information, you've got a good chart, you're at the bottom of the cycle, and you're massively undervalued. If you screw up the purchase, you can sit and wait it. Time becomes your friend. If you buy something that's overvalued because it has a breakout at some arbitrary point, what do you do if you're wrong? What do you do if you are wrong? Are you going to go put a tight stop loss on it and get stopped out of every stock that you've ever seen? Because volatility in commodities is massive. So you want to make sure cycle bottoms, you want to make sure you've got good valuations, you want to make sure that all of that is at your back, pushing you forward and up. And then you can wait if something goes wrong. You can always use time as a hedge. Man, this dilemma eats me up at night. I have the cash to pay off the mortgage off, but I don't because of the math. Mortgage is 2.25%. The math checks out. But look at all the big name finance accounts saying how paying off the mortgage is the best thing ever. Someone tell me I'm right. And this one here says the only good mortgage is a paid off one. Our biggest monthly expense is gone. Well, for me, I am not paying mine off early. I'm just letting it hang out there. The surest thing that I've seen in any market is a declining dollar every single year due to inflation. It's basically baked into the design of currencies. So if we're printing money at 5, 6, 7, 8, 9, 10, 15%, I don't even know what they're printing it at. That's the value of the currency declining. If the value of the currency is declining and your interest rate is below, your mortgage interest rate is below that inflation rate, then I wouldn't pay it off. Now, that doesn't mean that everyone shouldn't pay it off. I'm not going to pay it off because I've been responsible in my life and I've saved a whole bunch of money and I've invested a lot of money. So I could pay my mortgage off probably, I don't know, 15 times over, something like that, maybe 15, 20 times over. So I've got, more money than I need to pay that off. I have a very big cushion. I've got a bunch of money in savings, a bunch of money in retirement accounts, a bunch of money in HSA. I've done my savings up front and I'm letting it all go, invest and work out. I've got dividend payments. I've got a lot of cushion. Now, someone who doesn't have a lot of cushion, you might want to save a 1 or 2 year emergency fund, or at least 6 months to a year, and invest the rest. You got to build a cushion. So maybe there's other people where they struggle to build a cushion and they need to get that paid off first. My mortgage is a very small percentage of my income and my net worth. So it's kind of like, it's like a credit. It's like less than, my credit card payments are more than my mortgage. My food bill is more than my mortgage. And I set that up back in, I refinanced back in 2021. I'm at 2.75% if you want to know. And I just don't see I don't see any reason to pay it off. I'd rather go dump that money into a dividend paying stock with a bunch of upside potential and a bunch of dividend upside potential than paying off a 2.75% interest rate mortgage. Now, I understand that there's a psychological aspect to it. I get it. And it would be nice to get rid of it. I would agree, but I just don't see why. I would say in about 10 to 20 years, if that mortgage still exists of mine, it's probably going to be like a dinner. The cost of dinner in 2035 or 2040 or whatever it is, it's probably going to be like the cost of a dinner. So, like, why would I pay off high value purchasing power dollars today in something that's going to be so little in the future in terms of purchasing power per dollar? So I just can't do it. I just don't. It's like, why would I pay this off? It doesn't make sense to me to do it. But again, I am not everybody. My brother, he's paying his off as early as possible to get rid of it. So we are two very different mindsets uh, from the same family. So we're very different. Grady says, been saying for years that capital is now rotating into commodities. The capital rotation turn is not coming. It's already here. Been positioning, for example, these historical turns plus the breakouts in real time. The big ratio chart turns are already in. They're not coming. So these are all bottom. They're already turned, and they're ripping higher, guys. We are in the commodity bull market. We are in it. Some of them are ripping. Some other areas have not really moved as much, like oil. And that's where I think the opportunities are the ones that haven't really moved as much yet. Dow Jones versus gold breaking lower in favor of gold. This is GDX versus NDX. That's a breakout, clear breakout for gold miners versus NASDAQ 100. So what are we waiting for? I'm not waiting. I'm already in. I'm positioned. I've purchased a lot. There are other companies that are still great opportunities that are at lows and people aren't looking. There's a whole bunch left. So don't feel like you've missed out on anything. You haven't. But I would also kind of be getting on it right now and looking and maybe taking positions in certain sectors where things haven't moved very much. There are a couple that are still way down that people aren't looking at, sectors that people maybe don't care about, that I think maybe are very leveraged to the upside move in commodities. The biggest thing about making money is time. You don't have to be particularly smart. You just have to be patient, says Warren Buffett. And that's where we're going to end it, guys. That's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is the coupon code. And that's all I've got. So we'll catch you later, guys. See ya.